Hi students, welcome back to class number 11 on CMA and financial management. So guys, on the study material, we are covering the chapter number 1, which is decision making tools, and we have covered almost all the illustration, and after that there are some additional problems given in your book, and there are 44 additional problems, and we have covered problems till 16 in our last class, which is class number 10. Please watch all the videos in a order so that the formulas that is discussed in the earlier videos will be carry forward to the next class, and in the next class we will not discuss about the formula so detailed similar to the previous class, so you may miss some points. So please watch the class in order. Okay, and also please share the videos to your batchmates who are all in need of this. I hope that with this third wave, many students are feeling it difficult to go to the class, and it is also said by some people that the results will also be released with the usual date itself. So exams are happened late, but results will be as usual. Okay, so that there will not be any problem for the next term of examination, which is June 2022 examination. So that has to happen as per schedule. So the result has to happen as per schedule. So guys, which means that you will have a limited time after the results are given. So uh, start your work, start preparation. Okay, and also share the things to the needy people. So many people would have planned to have some fun for the interim period, as the exams have just got over. Okay, so guys, at least spend some 15-20 minutes per day now, and you can increase it to half an hour, 1 hour, 2 hour per day, and at least reach a maximum of 5 hours per day for successfully clearing the examination. Let's go into the video for today. So we are in the problem number 17. Okay, a company manufactures scooter and sells it at 3,000 each. Okay, scooters are sold at 3,000 per piece. An increase of 17 percentage in cost of materials and 20 percentage of cost of labor is anticipated, and this is really happening in the industry, guys. After corona time, the steel prices have gone up significantly. All the automotive manufacturers are facing this. You can also google it out to know how the steel prices has inflated over the last 2 years. Okay, so here the cost of material, a scooter, the main material will be steel, right? So 17 percentage increase in cost of materials and 20% of labor cost is anticipated. Okay, so this anticipations will come from the marketing team, from the purchase team, and from the materials team to the finance department, and finance department has to consolidate all this data, how the product pricing decision, product profitability decisions will vary, and we have to project that to the management so that appropriate actions can be taken. Okay, so the increased cost in relation to present sales price would cause a 25% decrease in the amount of gross profit. So if the price is not increased, but metal cost has gone up by 17 percentage and labor has gone up by 20%, in that case we will be making 25 percentage lesser profit if the same selling price is maintained. Okay, at present material cost is 50 percentage of wages, 50 percentage, I'm sorry, wages is 20 percentage, overhead is 30 percentage of cost of sales. So if you take cost of sales at present, 50 percentage is material, for 20 percentage is wages, and 30 percentage is overhead. Okay, so you are required to prepare statement of profit and loss per unit at present. At present, what is the statement of profit, and compute the new selling price to produce the same percentage of profit to the cost of sales as before. So what is the present profit? Put a statement for a present profit, and how much money you are, how much profit percentage you are making. Apply the same profit percentage for the calculating the new selling price. Why should we calculate new selling price? Because the cost is going up here. Okay, material cost is going to increase, it has got inflated, and labor cost also, they said that 20% it is inflated. Both are anticipations, but so if you are going to sell with the same selling price, you are going to make not going to make the profit which you are making it before. So you have to increase the selling price because all your input cost is going up, and the industry will also do so, because nobody will create lesser profit for them. So we have to move along with the industry. If company as a whole, if we increase, the demand for our product will go down, but industry as a whole will increase, then the end customers has to pay for it. Okay, so what we are going to do about this problem? Okay, so this problem needs your computational skills along with mathematical skills. Okay, so you have to solve equations, quadratic equations. So you know what is quadratic equation, guys? There will be x and y. Okay, there will be two variables and there will be two equations, and you will solve both the equation and to find the value of x and value of y. I hope you know how to solve the equations. Okay, so let us see. In the first step, I am assuming x as the cost of sales, and it is given in the question at present level. Material cost is 50% of cost of sales. So 0.5x is material, 0.2x, which is 20% of x, 0.2x is wages, and 30% is overhead. 0.3x is overheads. So putting together 0.5 plus 0.2 plus 0.3 is the cost of sales, which is nothing but x itself is cost of sales. Okay, so 0.5 plus 0.2 is 0.7, 0.7 plus 0.3 is I'm sorry, it is 1. So 1x is equal to x, x is equal to cost of sales. Okay, so we have just assumed x for cost of sales, and breakup of x into material, wages, and the overheads is also given in the question. Now they have also we are assuming y as profit. So x is cost of sales, y is profit. Then what is x plus y? X plus y is nothing but the selling price. So selling price includes the cost portion also and profit portion also. Now y is profit, x is the cost of sales. So x plus y is equal to 3000, because it is given company sells the scooter for 3000 rupees. Okay, so x plus y is equal to 3000. We got one equation. So to solve for x and y, we need one more equation so that we can calculate the value of x and y. Okay, so let's see what more details are given in the question. So there are some increase in cost anticipated, 17% increase in cost of material. What is the material cost as of now? 0.5x is the material cost. Now if it goes up by 17%, what does it mean? 117%. So 117% of 0.5x is equal to 0.585x. So which means 0.5x will become 0.585x if it is inflated by 17%. Same way, labor cost is going to increase by 20%. So 0.2x is going to become 120% of 0.2x, nothing but 0.240x. Okay, 0.240x. So next comes the overhead. So overhead is 0.3x, and there is no increase anticipated for the overhead. So it is 0.3x. So putting this into the equation, 0.585x is the increased material cost, plus 0.240x is the increased wages, and 0.3x, which is the overhead, there is no change in it, is equal to 1.125x. If you add it, it comes to 1.125x is the new cost of sales. Because of increase in the material cost, increase in the labor cost, x was the cost of sales, that has become 1.125x because of these increases. Now they have also said if sales price is maintained as it is, profit will decrease by 20%. So x plus y is the profit. Okay, y was a profit, and in the new scenario, y will become 0.75y, which means 25% less, which is 75% of y. It's nothing but 0.75y. So profit will fall if this cost increase has happened. So 0.75y will be the new profit, plus what is the new cost of sales? 1.125x, putting together the same selling price of 3000 rupees. So we have got the second equation, which is 0.75y plus 1.125x is equal to 3000. So guys, you have two equations. You can multiply the equation number 1 by 0.75 and reduce this equation from equation 2. You can cancel off all the y, and you can find what is the x value and apply the x value in one of the equation, and you can find the y value. And if you find so, x will come to 2000 rupees and y will come to 1000 rupees. Okay, so what is the question asked here? Prepare the statement of profit loss per unit at the present. So very simple. So you have the value of x and y. You can find the since you have the x value, you can find the material cost 0.5x. You can find the labor cost 0.2x. You can find the overhead 0.3x. Also, y is the profit. Y also you have 1000 rupees. So you can put a table and you can find what is the material cost, what is the labor cost, what is the overhead cost. You can put the sales at the top. Sales minus all this cost, you will get the profit. Okay, and that profit sales minus all this cost, you will get a profit also. You detail you have, and which is 1000 rupees. You can apply the 1000 rupees, and that will be the statement of profit at the current level. And what is the percentage out of 3000 sales? 1000 rupees is the profit, or you can say cost of sales is 2000 and 50 percentage of cost of sales is the profit. So 50 percentage of cost of sales is profit at the current level. And okay, so compute the new selling price to produce the same percentage of profit of to cost of sales. So same percentage profit to cost of sales. At present it is 50 percentage. For the new scenario, which means the revised cost, the cost increase scenario also 50 percentage of cost of sales. So in the new scenario, after cost increase, 1.125x is the new cost of sales. You know the value of x, which is 2000. Apply 2000 into 1.125. You can find the new cost of sales, and 50 percentage of cost of sales is the profit. Add the 50 percentage of new cost of sales. You will get the new selling price. Okay, so guys, I have not given the answer here. I just want you to calculate. I have just given the hints for you to develop further. So for both the questions A and B, you have to calculate the equation and find the value of x, find the value of y, and then please put a table for A and B separately to show the profit statement. I'm moving to the next problem. So problem number 18, an umbrella manufacturer marks an average net profit of 2.5 rupees per piece on a selling price of 14.30. So he is umbrella manufacturer. 14.30 is the selling price, and he makes 2.5 rupees net profit. So net profit, which means even reducing the fixed cost, the net profit. Okay, so sales minus variable cost comes the contribution, minus the fixed cost becomes the net profit. And producing and selling 6000 pieces, and while producing 6000, he is at 60 percentage capacity. His cost of sales is given below. So material cost is given, wages cost is given, works overhead is also given, which is 50 percentage is fixed and 50 percentage is variable, and sales overhead is 25% variable, 75 percentage is fixed. Okay, so during the current year, he intends to produce the same number, which is 6000, but anticipate that the fixed charge will go up by 10 percentage. So anticipations has reached the finance department. So guys, you have to read the question as if you are finance department. So all these factors have come to your desk from various department. Okay, which okay will go up by 10%, which direct labor rate and material will increase by 8% and 6%. So guys, there is a twist here. Direct labor rate is given first and then material. So direct labor is 8% and material is 6%. So I have seen many students who apply the vice versa. Okay, so respectively, but he has no option to increasing the selling price. So because of this pressure of cost increase, he has to increase the selling price. Under this situation, he obtains an offer for further 20% of the capacity. So he has received some offer for another 20%. So we know that he is operating with 60% capacity only. For another 20%, he has received some offer. So which means, can you give your product? So that kind of enquiry has come. Okay. What is the minimum price you will recommend for acceptance to ensure the manufacturer an overall profit of 16,730? So what is asked is 16,730 is the profit management wants to earn that profit. We have to give a price for our new enquiry that we have received. Already we are operating at 60% capacity. For 20% of the capacity, we have 40% idle. Okay, out of that 40, 20% we have received an enquiry. For that enquiry, we have to say that yes, this is the price. I can offer you this 20%, and this will be the price per unit for that. So what will be that price? And with that price, your company should overall make 16,730 as the profit. Okay, so first detail what we have is we are operating at 60% capacity. At 60% capacity, we are making 6,000 units, which means at 100% capacity we will be making 10,000 units. This is the first level of detail. Next, we have details for the past year, and for the current year what all cost increase will happen, that is also given in the question. I am just populating those things in the table. This is a new table which I have made. I will never follow book, guys. This will be something new, but when you see this you will understand the fact, and after that when you see the book, book will show you how to present in the paper. So you can apply both. You can get the knowledge from this video. You can apply apply application, how to apply or answer that in your answer sheet that you can see from the book. You can couple both the knowledge and you can deliver in your examination. So material cost is given 3.5 rupees, wages it is given 1.25. Okay, 6,000 is the volume. So the first column I am putting the per unit, and in the second column I am multiplying by the production quantities, which means the total level. Okay, so 3.5 into 6,000 will become material cost of 21,000. 1.25 into 6,000, it comes to 7,500. Okay, so works overhead they have given 50% is fixed, and 50% is variable. So 50% of 6.25 is 3.125. So 3.125 variable, and sales overhead 25% is variable. So 25% of 0.8 is nothing but 0.2. Okay, so total altogether 3.5 plus material, labor, works overhead and sales overhead, putting together the total variable cost will come to 8.075. Multiplied by 6,000, it comes to 48,450. And selling price, it is given in the question as 14.3. So 14.3 multiplied by 6,000 units, because it is said that producing and selling 6,000 pieces. So which means sales volume is also 6,000. So 14.3 multiplied by 6,000 comes to 85,800. So sales minus variable cost, which is given in the top, gives you the contribution. Contribution per unit can also be found. Per unit can be found. And now we can increase the cost. What is the anticipated cost? It is said that fixed charge will go up by 10%. Yes, we will do that because there is a twist in fixed cost. So we have to apply it very carefully. Okay, direct labor 8%, material is 6%. So direct labor is 8%. So 1.25 goes up by 8%, which is nothing but 108%. It becomes 1.35. Material goes up by 6%. So 3.5 becomes 3.5 into 106%, which is 3.71. So you can multiply 6,000 to find the total cost here. Okay, so works overhead and sales overhead has not changed. It is remaining as it is. So add all the works variable overhead plus labor plus material. You will get the total variable cost. Reduce it from the sales. So sales number, as of now, the sales figure is not changed. We have not changed the selling price per unit. So we are making the same sales revenue of 85,800. So the contribution per unit is also found. Now we have to find the fixed cost. We have given fixed works overhead has the fixed component of 50%. So 50% of 6.25 will become 3.125 multiplied by 6,000 numbers, because they have given this is the overhead fixed for the 6,000 number of production. So multiplied by 6,000, 18,750 is the fixed works overhead. Similarly, fixed sales overhead is 75% of 0.8, which is nothing but 0.6. 0.6 into 6,000 will give you 3,600. So 18,750 and 3,600 are both fixed cost. Okay, and this will be constant for the current year also, provided there is no increase. But they have clearly said fixed cost is going up by 10%. So we should not apply per unit increase of 10%. We will go terribly wrong, which shows that you have not understood the concept of marginal costing. In the concept of marginal costing, if fixed cost per unit is given, multiply by the respective production quantity, and then you will get the full cost, and the full cost or the total fixed cost you can carry forward to the next year, provide the same number if there is no increase. If increase is anticipated, in this case 10% increase is anticipated, so 18,750 multiplied by 110%, it comes to 20,625. So do not increase the per unit by 10%. Okay. In this question, since the quantity is same, it may look right, but never apply that. Okay. So here 3,600 multiplied by 110%, it comes to 3,960. So the new fixed cost is there. So contribution minus fixed cost, you will get the net profit of 10,905. Okay. So guys, after increase of the cost, material cost is gone up, labor cost is gone up, fixed cost is gone up. After this increases, we are making a money of 10,905. How much money does management wants? Management was 16,730. Okay, but we have made 10,905. Now at this moment, you have got an offer for 20% of your capacity also, which means 2,000 units. Okay, so 6,000 pieces, 60% capacity. So for 20% you have received an offer. So which means 2,000 numbers offer has come. So you have to accept and give that this is the selling price for that. What will be that selling price? Okay, with that selling price, you have to end up earning 16,730 as said by the management. Now 16,730 is the required profit minus 10,905. We have already made that money, 10,905. So balance 5,825 we have to make from how much units? From 2,000 units. So 5,825 divided by 2,000, it's going to make you have to make 2.9 rupees for per unit. Okay, 2.9 rupees per unit. Already you have taken back all your fixed cost. That's why your net profit is positive. So you can give a quotation at the variable cost level itself, because all your fixed cost you have already taken back. So 20,000 and 3,960 both you have taken back, and you have left out with the net profit. So which means there is no fixed cost that is left to be taken back, but variable cost you have to take back, because for this 2,000 units variable cost you have to incur to make it. So we have to take the variable cost. What is the variable cost per unit? Yes, we have made the total also here, 8.385. So 8.385 plus a profit of 2.91. So add both, the selling price 11.29. We can just give a quotation of 11.29 rupees for that 2,000 to yield a profit of 16.73. We are very comfortably placed here. 14.30 is the selling price which we are already selling, but 11.29 if we quote itself for the 2,000 order which we have received, with that itself we can achieve the management's 16,730. If your customer while negotiation is willing to pay anything more than 11.29, we can achieve the profit as dictated by the management. We can achieve that, and we can achieve more than that also. Okay, so guys, that's about this problem. Let me move to the next problem. Okay, so problem number 19, the dynamic company has 3 divisions, each of which makes a different product. The budgeted data for the coming year is given. So there are 3 product guys. So A, B and C. Sales is given, material is given, labor is given, direct expenses is given. Okay, so direct material plus direct labor plus direct expenses, you can total it. You can put the total variable cost, and then you can put the contribution. Contribution is sales minus variable cost contribution. So you can find the contribution for A, B and C. Fixed cost is also given in the question. So below contribution, you can put the fixed cost, and then you can reduce the fixed cost from the contribution to find the net profit. So the net profit statement is over. I don't know whether they have asked that or not, but the net profit statement is given in the question. The management is considering to close down the division C. Okay, there is no possibility of reducing the fixed cost. Okay, advise whether or not division C should be closed down or not. So guys, make a uh, make a statement of net profit, put a sales, and put a column called put a row called variable cost. Add the variable cost, direct material, direct labor, direct expenses, total variable cost. Reduce the variable cost from the sales, you will get the contribution. From the contribution, reduce the fixed cost, you will get the net profit. Add the net profit of A plus B plus C, that will be the total net profit. Now without C, do the same table without C. If your net profit is going down, which means C is also contributing to your net profit, we should not close down C. But because of eliminating the C, your net profit has gone up. In that case, C is making loss. In that case, you can close down C. That is what is the decision making, guys. So I hope you can make this problem. This is very similar to what we have done. We are much more experienced with all our last videos. So for our experience level, this is a very simple problem. So hope you understood. So make a net profit statement for A, B and C, eliminate C and make A and B net profit. If the net profit is so case 1 and case 2 you have made. So case 1 is A, B and C, case 2 is A and B alone. Okay, compare the net profit, whichever is higher is best for you. If A and B makes more net profit, then C closing down is better. If A and B makes lesser net profit than A, B and C, which means C is also contributing to net profit, we cannot close down C. Okay guys, so we will move to the last problem of the day. Mr. Young has 1,50,000 rupees investment in a business. So he has 1,50,000 rupees for investing in the business. He wants 15% profit on the money. From an analysis of recent cost figures, he finds his variable cost of operating is 60% of sales. So guys, this is very critical problem, but it's a very small and very simple problem. But we have to grasp all the detail that is given in the question. So what is given in the question? From the analysis of recent cost figures, he finds that variable cost is 60% of sales. Okay. So if variable cost is 60% of sales, what is the 40%? 40% is contribution, because 100% minus 60% of sales is 40% of sales. So the contribution is 40%. So contribution is 40% of sales, which means contribution divided by sales is nothing but 40%, which is nothing but otherwise called as contribution margin or otherwise called as PV ratio. So guys, so watch all our videos and we have been given PV ratio. So if variable cost is 60% of sales, 40% of sales is PV ratio, or otherwise called as contribution, or otherwise called as 40% of sales is contribution. His fixed cost is 75,000 per year, which means fixed cost is given, PV ratio is given. Fixed cost divided by PV ratio, we all know this formula, break even sales. We can find the break even sales. So the supporting computation for each answer below. What is the sales volume must be obtained to break even? That's guys. So you know, you have the PV ratio, you have the fixed cost divided by PV ratio, you can find the break even sales. Khatam. Okay. The next problem. What is the sales volume must be obtained for 15% return on the investment? Break even sales means sales at which the net profit is zero, which means you have made some contribution and that contribution is enough to meet the fixed cost. Contribution minus fixed cost is zero. That's why the net profit is zero, which means the contribution is equal to fixed cost. Now you have made a contribution of equal to fixed cost. Now you have to make contribution more than the fixed cost so that you will end up making the net profit. How much net profit you have to make? You have to make 15% return on investment. What is the investment? 1,50,000 rupees. 15% of 1,50,000 rupees is 22,500 rupees. So your net profit has to be 22,500, which means you have to earn a contribution of fixed cost plus 22,500. Okay, so that fixed cost plus 22,500 is the contribution, minus fixed cost 22,500 will be the net profit. So fixed cost, it is given 75,000. So 75,000 plus 22,500 is the money you have to make. So whatever is the money you have to make as contribution divided by PV ratio, you will get the sales. So here 75,000 plus 22,500 divided by the PV ratio. Okay, so 75,000 plus 22,500, what will it come? 85, 95,000, 97,500. So 97,500 divided by PV ratio of 40%, you will get the sales volume required to make a 15% return on investment. Okay, the last one, which is a very crucial question. Mr. Young estimates that even if he closed down the doors of his business, he would incur 25,000 expenses per year. So even after he closes down, he will incur 25,000 expenses. What as of now we had 75,000 is the total fixed cost. Out of 75,000, 25,000 he will incur even if he has closed down the door. Okay, so 25,000 expenses will keep on happen, which means it is a fixed cost. Fixed cost as of now we were discussing about 75,000. So this 25,000 should also be part of that 75,000. At what sales it would be better off locking his sales up? So which means, okay, break-even sales is a sales at which net profit is zero, but you will end up taking all the fixed cost. Okay, at break-even point, you have recovered all your fixed cost, but you have not made any money more than the fixed cost, because of which your net profit is zero. How much is the fixed cost? 75,000 rupees. So at break-even sales, you have taken a contribution of 75,000 rupees. Now 25,000 out of this 75,000 will be a recurring cost even if you close down, which means this 25,000 you can't control it with your product, and even if you close, this will happen. So what is the non-controllable, non-product related? This is totally not related to product. This is totally not controllable. Because of closing the doors, you cannot control it. It will happen. For example, for gardening, you have put a labor. If you don't put that labor, even on the shop floor, some because many muddy regions may be there, and gardens or unwanted plants may grow up there. So a gardening person or a cleaning person or a housekeeping person has to be there, so that the factory will be in a working condition. So this is like some cost. Even after you close down, you have to put some labor to do the maintenance things. So this is one such cost. So now what I'm going to do, out of the 75,000 fixed cost, 25,000 I'm taking out. So 75,000 minus 25,000, it's going to be 50,000 rupees. So 50,000 rupees is the real break-even sales, or you can say it as a shutdown sales. If I'm making 50,000 rupees contribution is enough for me. I need not make 75,000 for doing my break even. I have to make 75,000 contribution. For making a shutdown decision, even 50,000 contribution is also enough. So what I am doing, this non-controllable, non-product related fixed cost of 25,000 rupees, I am reducing from the 75,000 fixed cost. So what I have to take back through contribution is only 50,000, which is 75,000 minus 25,000. So 50,000 divided by the PV ratio of 40% will give you a shutdown sales. This sales quantity, note, shutdown break-even sales is less than the normal break-even sales. In the normal break-even sales, you will take back all the fixed cost. All the fixed cost means you will take back the product related controllable fixed cost, also non-product related non-controllable fixed cost. This non-controllable fixed cost, even if you close door, it will continue to happen unless you shut down. So in order for you to shut down, okay, in order for you to shut down, you have to make 75,000 minus 25,000, which is nothing but 50,000 rupees. For making 50,000 as contribution, what is the sales required? 50,000 divided by the PV ratio of 40%. So that is the sales, and that sales will be much lower than the break-even sales itself, which is asked in the first question. So first question is the break-even sales. Shutdown sales is far lesser than the break-even sales. Then you have take back all your controllable fixed cost. Then when you completely lock down the company, completely shut down the company, even this 25,000 expense will stop happening. Okay, so that's it for the, that's it. So with this 20 with this shutdown sales, you are okay to proceed for shutdown. Okay, so that is a decision making point. Okay, when you have achieved something shutdown sales, it is good to go for shutdown. And while the process of shutdown happens, your break even sales also you would have achieved. Okay, so only then we can take back all our fixed cost. Even if it is non-controllable 25,000, we have to take back that. That is the best way to do that. So all the best guys, meet you with the next class.